To buy or not to buy? That is the question. And I guess for a lot of Canadian investors, for their investment life, the answer for the most part has always been to buy. We've always bought up our Canadian bank stocks. Let's be honest, the five big banks, if you add National Bank as the sixth, they dominate the Canadian landscape. You have our five biggest banks right across the country. National Bank is kind of the sixth because it's primarily in Quebec. You'll find National Bank here in Ontario as well a little bit, but it's not right across the country. They've made acquisitions to try and be a little bit more, have business right across the country. But for the most part, you're talking five major banks. And when you have five banks dominating as they do, how can you not own a piece of our Canadian banks? And, their results that just came out were unbelievable. The wealth management division, capital markets division, just booming right now. And, yes, some of the banks set aside, I guess, some more money for, for potential bad debts or loans that are going bad. But the capital markets and wealth management division more than offset the growth there, more than offset any money that maybe banks set aside, any more money banks set aside for bad debts. And make no mistake about it, listening to some of the CEOs talk on some of the calls, for example, the CEO of CIBC, they talked about trying to have more business in the US, more business outside of Canada. And we know that the largest banks in our country, TD and Royal, have a lot of business in the US and outside of Canada. Scotiabank, probably the most international of our banks, has a lot of business not only in the US, but also in Central America, for example. And Scotia talks lately about having more business in the US and how that has made their bank a lot more profitable. So investing outside of Canada seems to be a bigger and bigger theme for our banks, and it is working. So let's take a look. Our first chart, Hamilton Enhanced Canadian Bank ETF. This is a chart I use often. This is how well banks have done. Look at all of our banks in one ETF or in one index. Look at the banks. And we go through some of the banks. And our first chart, CIBC Bank, it looks like the ETF. Not much difference. And most of these charts will look similar. Look at TD Bank, similar chart. We have it next. Pull up our TD Bank chart there. There it is. Almost looks exactly like the ETF. So you could see whether it's individual banks or banking sector as a whole, it's done extremely well. Our next chart here for Bank of Montreal is probably the only chart that is kind of different. Which chart doesn't belong here kind of game that we used to play as kids. And Bank of Montreal is the one that seems to have plateaued in and around the prices that it has, just about 3% off its all-time high. So we're not talking about any major pullbacks. Royal Bank, what a chart here as well. Our next chart, look at Royal Bank. It's done extremely well as well. And, looking at our last bank chart here is Scotiabank. Scotiabank now up to $100 a share. I remember when that stock was sitting around $77 a share, and investors were asking me, why are you buying it? Why are you buying it? And I said, well, with the turnaround, with the restructuring, I think it's a good idea to buy shares of Scotiabank. And if not only that, their yields were at 6%, when all the other bank yields on dividends, the dividend payments were 4%, 3%. So Scotiabank, now, with only a dividend yield of about 4.5%, because the stock price has gone up by so much. So if you're sitting there wondering, look how great the banks are doing, should we be buying banks? Well, in my opinion, I don't think that is true. I think the banks are perhaps fairly or even overvalued at this time. And so for me, I would say the banks, if you hold them, continue to hold them, maybe trim some profit from the top, and move that money to other areas. But bank stocks in Canada right now are just too high. You have basically three major banks today alone reaching new all-time highs. TD, Royal, CIBC, actually four. Bank of Nova Scotia also hit an all-time high earlier in the day. And as I said, Bank of Montreal is just off its all-time high. So bank stocks just seem to keep moving to the upside. Their dividends that they're paying are fixed. So what does that mean? Well, you take the dividend of $1 or $2, whatever it is, and you divide that by the price, which seems to be keep rising. And what do you get? You get lower yields. So once upon a time where these bank stocks were yielding 4 or 5%, now they're yielding 3, 4%, not as enticing for dividend investors. So for me, I like the banks. I think you want to hold the banks, but you want to, keep an eye on them. Maybe on a dip, you could take a look at these banks because right now, in my opinion, to add a lot of money to them or to make a new buy, I think they're just a little bit too expensive and you may want to hold back on those purchases.